You ever wonder what it really looks like when Wall Street panics? I mean, when a single day can just erase weeks, even months of gains? Well, today we're going to break it down. We're going to look at the anatomy of a real market crash.
It always starts with a number, doesn't it? A big, bright, red number that you just can't ignore. On this one Tuesday, the Dow Jones Industrial Average dropped a massive 828 points. And listen to this. At its worst point during the day, it was down almost 1,300. Now, a number like that makes everybody, and I mean everybody, stop and ask the same simple question.
So, yeah, what on earth rattled Wall Street so badly? Was it some terrible earnings report? Did the Fed do something unexpected? Nope. This time, the shockwave didn't come from a corporate boardroom or from Washington, D.C. It started thousands and thousands of miles away. Think of it like a stone dropped in a perfectly still pond. The stone, in this case, was a huge geopolitical event, a conflict between the US and Iran that was getting worse by the hour. This wasn't just some background noise on the news. This was a series of fast-moving events that sent a wave of pure fear through the global markets. And you can just see how quickly it all spiraled out of control. It felt like one breaking news alert after another. Drones hitting an embassy, then a threat to shut down a critical shipping lane, then attacks on key allies, and finally evacuations of American personnel. You know, investors are looking at this and they're not thinking this is some short-term spat. They're thinking this is big. And the very first ripple from that stone was felt in the energy market. And that, of course, brings us to the oil shock. Because whenever there's a major conflict brewing in the Middle East, the first thing the market thinks about is oil. And the reaction, well, it was immediate and it was intense. The numbers here are just incredible. In one single day, both the global oil benchmark, Brent crude, and the US benchmark, WTI, shot up by almost 8%. For oil, that is a massive, massive jump. And it was all driven by the fear of a supply disruption, all focused on one of the most important pieces of water on the entire planet. And here it is, the Strait of Hormuz. This is the choke point. When Iran threatened to close this waterway, and we're talking about a place where a third of all the world's oil that travels by sea passes through, it sent an absolute shockwave of panic through the energy world. This wasn't just a political threat. It was a threat to the lifeblood of the global economy. And this quote here from Adam Crisafulli really nails the shift in thinking. The fear went from, okay, this might be a quick fight, to something much scarier. The market started worrying about a prolonged retaliatory response, a chaotic, unpredictable conflict. And that fear, well, it didn't stay contained in the oil markets for long. So the oil shock and all that geopolitical anxiety, it just couldn't be contained. It spilled over like a flood and triggered a massive broad-based sell-off that hit pretty much the entire stock market. And the change in mood was just whiplash-inducing. I mean, look at this. On Monday, investors were feeling kind of optimistic, buying the dip, thinking it'll all blow over soon. By Tuesday, that hope was gone. Poof. All the major indexes were tumbling, and the VIX, Wall Street's fear gauge, it spiked to its highest level in months. The sentiment just flipped on a dime. And the pain was absolutely everywhere. There was just no place to hide. Every single one of the S&P 500's 11 sectors ended the day in the red. It wasn't just tech getting hit or banks. It was everything. If you look at the hardest hit parts of the market, you can really see what traders were scared of. Materials stocks got slammed because of fears of a global economic slowdown. Industrials took a hit because of what rising oil prices might mean for borrowing costs. And consumer discretionary, the companies that sell us stuff we want but don't need, they got hit because, well, higher gas prices mean less money in our pockets for fun stuff. All right, so let's zoom in a little bit. Let's move from the whole market down to the individual stocks and other assets. This is where you see the outermost ripples of that initial shockwave, and it creates this really fascinating mix of winners and a whole lot of losers. So one of the first things that happened is that a lot of the year's most popular trades, the so-called momentum investments that had been working great, they just completely fell apart. All those things that seemed like sure bets, all of a sudden, they looked incredibly risky. And the numbers really tell the story of just how violent that reversal was. Gold and silver, which a lot of people think of as safe places to hide during chaos, they got hammered. And check this out. The South Korea ETF, which had been one of the year's top performers, plunged a staggering 14% in one day. It just goes to show you, in a true panic, all the old rules can go right out the window. The damage was just so widespread. You had the memory chip stocks, the darlings of the AI boom, down over 8%. The cruise lines, which hate high fuel costs and global instability, they all dropped hard. Metal miners got crushed. And then there's this. The software company MongoDB collapsed 28% after a bad forecast. The market was just in zero mood to forgive any bad news from anyone.
But, and this is so important, in this absolute sea of red, there were a few surprising little islands of green. It's a great reminder that even on the absolute worst days, the market is never just one single thing. Case in point, Best Buy. While the whole market was seemingly in a meltdown, its stock actually climbed 4%. So why? Well, it turns out that even though their sales were a little weak, the company showed investors it was getting way more profitable. It was a good company-specific story that was strong enough to fight against that market-wide panic. So, what have we seen here? A single geopolitical spark can ignite an oil shock, which then triggers a market-wide panic that can crush even the hottest investments of the year. But as Best Buy showed us, there are always exceptions. And that brings us to the ultimate million-dollar question for any investor, right? When fear is absolutely everywhere, where does the smart money actually go to hide?